Hello ladies and gentlemen, in this short video lesson I'm going to teach you about accounting rate of return, which is the non-discounting technique to evaluate capital budgeting. Let's start. Initial investment is $220,000, scrap value is 0. There following are the total inflows. Total inflows we have, if I calculate of the project, around 3,75,000, right? And the tax rate is 20% straight line depreciation. The formula is average profit equals to average investment. In order to do that, first of all I need to calculate average profit. In order to calculate average profit, I need to calculate tax first, because here is the formula tax. What is the formula of tax? Inflows minus depreciation multiplied by rate. So I calculate the total inflows and depreciation value. Total inflows are, for example, if I show you, total inflows are 3,75,000. 3,75,000 minus 3,75,000 minus $2,20,000, right? So I get 1,55,000. Multiply by 20%, so I get the tax of project A. Understand? In order to, I just tax a project A. Okay. So first, now let's apply the formula average profit, which I already did. Inflows minus depreciation, now minus tax, which is this, divide by number of years, which are 7. As you can see, number of years are 7, so just write 7, divide by, just divide by 7, that's it. You will get 17,714 profit, average profit. Now you need to calculate the average investment. Initial investment, right? I'm applying minus because it's also already in minus, so that's why minus plus. Initial investment divide by 2, you will get 1,10,000, because we don't have scrap, we don't have working capital. Otherwise we have scrap, so we need to add the scrap value as well. Understand, ladies and gentlemen? Okay, so 1,10,000 is your average investment. Just apply in the formula of project A. This is for project A. Just apply the formula. We get 16% accounting rate of return. Okay, now apply the, now let's calculate for project B. For project B we have inflows, this is project B. We have inflows, for example inflows we have 4,70,000 and outflow is 2,20,000, same investment. So 4,70,000 minus 2,20,000, we have 2,50,000 is your inflows minus depreciation. Now I need to calculate the tax. So inflows minus depreciation multiply by tax rate. So I get the tax of project B, tax amount of project B. Let's calculate the average profit of project B. Again same, just apply the okay. So what you need to do, this minus this, and then ladies and gentlemen, what you need to do is, as you know, average profit formula, inflows minus depreciation minus tax, divide by 7. That's it. With the, like, just like in the previous we did for project. So I've gotten 28,578 average profit. Now let's calculate for average investment. Average investment, again, initial investment minus 2,20,000 is the initial investment of project B, for just like same as project A. Then divide by 2, you will get your 1,10,000, same for average investment. Understand? Because average investment is the same for both the projects. Now apply in the formula. What you need to do, ladies and gentlemen, in order to calculate the average rate of return, you need like this, divide by L22, divide by this, so you will get the formula, in percentage, 26%. Understand? So which product should be, the average rate of return is 26%. So ladies and gentlemen, in order, if we see, so we accept the project B. Let's do that, accept and reject. Why? Because the average rate of accounting rate of return is greater of project B than project A. So that's why we reject 16% project A and we accepted project B, which is higher accounting rate of return. Understand, ladies and gentlemen, I hope you've understood. It's very easy to calculate accounting rate of return. It's a non-discounting. Again, if you ask me what is the limit, what are the limitations, in the limitation, the biggest limitation of accounting rate of return, it is non-discounting. No present value factor involves in it. uh, Non-discount in payback period as well as accounting rate of return. No discounting factor involves, means no present value factor involves in uh, accounting rate return and you can say payback period, right? I'll meet you in the next video. Take care and Allah Hafiz.